Hey, good morning, everybody. It's Thursday, February 19th, 2026. I, of course, am Hammer, owner of Originator Success, or actually, what I was trying to say was owner of Hammer Solutions, founder of Originator Success, Grab and Go Social, and Rate Sensei. Three great products from Originator Success, or from, man, I've been saying that for so many years now, from Hammer Solutions to help my originator friends get more business in 2026. I'm doing this in incognito window when I can see the comments today. Good morning, Angela. Good morning, Mike Tebow. Good morning, Nicole Semerad. Mike Tebow, Arrive is the dude. You're still on Calyx Point, really? Wow, I didn't know they were still around. Sean Segaloff, good morning, and Mallory Fodiatis. Jared Vincent, good to have you here. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. So glad to have all of you here. If you want a quick, it's already going to be one of those mornings. If you would like a quick text reminder that I'm going live so you don't miss the show, go ahead and sign up. Get that text message absolutely free. It's hmmr.io/reminder. If you're on your phone, you can take a screenshot, use this cool QR code over here, and we'll help you to get signed up. Also, don't forget to sign up for the free daily Lock Advice emails at ratelockadvice.com. Sign up for our text alerts at ratetextalerts.com. And that's it. That's it for now. So anyway, Eve, come on, turn that off. There we go. All right. If you're here this morning, say good morning. If you're watching on the replay, do me a favor. Give me a hashtag replay in the comments. Good morning, Zane. Good morning to your mom, Amy. Good morning, Michelle Shoemaker and Kathy Jensen, Ms. Brandy Brickler, Faye Escribano, Paul George, Deb Dickinson. Good morning, all. Don't forget to give us a thumbs up. If you're on Facebook, go ahead and give us a thumbs up on there, and or a smiley face, a laughing emoji, anything. And make sure you engage. If you're on YouTube, make sure you subscribe and give us a thumbs up as well. Also, don't forget, if you have a moment, give me your comments. Your comments help. They help with the algorithm, they help with engagement, and they keep me engaged. So always appreciate that. Again, welcome to all the live folks. Let's go ahead and jump in. Let's get started. Let me bring up the screen and we'll go from there. We're going to start with the technicals and then we'll have a grand old time. So let's go ahead and jump in. We're going to look at the technicals first. Taking a look here, you can see that to start the day, oh, what happened to Presentify? It disappeared. There you go. To start the day, mortgage-backed securities were down just a couple basis points. And right now at this moment, they're up a whopping basis point. So that is a wonderful thing. Let's do a quick recap of what happened yesterday. Let me go ahead and zoom in on this. And we will go ahead and take a look here. Again, mortgage-backed securities currently up 1 basis point. Yesterday, as pricing came out, bonds were generally right around 101.25-ish right here. Around 10 a.m. is generally when pricing comes out. We ended the day right around that same level this morning. This morning, we were a little bit worse here. We did get down. Jobless claims came out. That kind of was our low point. The reason that jobless claims is because they dropped by the most since November of 2006. What does that mean? Why does that matter? Well, you can't have a weak labor market if people are not unemployed. And we've seen this consistently week after week where the jobless claims really not that high. Now, again, it's arguable where we actually stand. Oh, this is a new layout. It's putting the... Do you guys see the comments over my face or is it just me? Nope, I don't like that. I don't like this. Ooh, I kind of like that. That's weird. I'll have to play with this a little bit. Let me go to the chat. Turn that off. Turn that back on. I'll have to go back and look at the recording, but does it put all the comments over my little face? Here I am behind here. Anyway, jobless claims dropped by the most since 2006. If we take a look at the technicals this morning, you will see right here. That was the low point on the day. But since then, you know, bonds have recovered. It's not really a big deal. We know where things are at right now. If pricing were to come out at this moment, you're going to see rate sheets that are, you have to mess. They did a whole new layout on this, so I'll have to play with this a little bit. Yeah, thanks, y'all. Let me do. Oh, there we go. All right, so I turned the overlay off. There we are. All right, back in the high life again. Anyway, rate sheets today, they're going to be about the same, maybe a little bit worse, depending on where they come out. Like it was going to be worse a minute ago, but then they're about the same. Taking a look, you can see it's really not much of a difference. There's such a slow creep right now. Let me adjust the size of this window. Get rid of that. All right. So taking a look here, you can see, I mean, we're really not much of a movement in rate sheets. And that's what we said. My advice, I'm about locking those loans closing on the near term, anything in the next 15 days. It's not likely that we have anything that's going to really help things improve from here. But anything that's closing in March or later, I would go ahead and float those. No reason to lock anything right now on that. So keep that in mind. Reprice risk on the day is low. We've already seen what we were going to see. We've got the jobless claims. We've got some GDP data that came out. U.S. trade deficit surged in December. U.S. trade deficit jumped in December. U.S. imports rose by 3.6% to $357.6 billion. I think the only thing the U.S. is importing over to China is Eileen Gu. But boom, let me know if you got that joke. And otherwise, really not much going on. Let's take a look at let me make this smaller again. 10-year Treasury yield is still below 4.10, but it is eking its way up. We definitely want to keep an eye on this. If it were to drop back down and get into the threes, that would be super exciting, but it's also extremely unlikely. We're very likely to see it kind of come up and could get as high as 4.20. Remember, 4.20 is our magic number, and it doesn't have anything to do with getting high or pot. That is just a line in the sand that has been very strong for the 10-year in the past, and we could see it move up all the way up to that point, which basically that would put rate sheets back to kind of some of the worst pricing around that 6.25-ish range instead of that low 6 range that we're at right now. So generally you could see as much as movement, in the next few weeks, probably 1/8 of a point in rate, maybe. But we're not likely to see much movement at all in anything. It should be pretty quiet. So I do have your comments open. Tiffany said, I like seeing the information you're presenting. I can see them on Facebook since you cannot zoom in on Facebook, but the comments were over my face. Thank you. Let's see. Jobless claims will continue to fall as less jobs are created. I don't know that that's necessarily the way that it works. I don't agree with that. Jobless claims are people that are going on unemployment, so they're generally people that have been laid off. They were already in a job. If you had more jobs created, then you'd have less people going on unemployment because it would be easier for them to get another job. Jobless claims would increase if you have less jobs created because people are laid off and they can't find another job and they're on unemployment, especially when it comes to continuing claims. So you've got initial claims. Those are people that are applying for unemployment for the first time. Those are your initial claims. And then you have your continuing claims. And if we take a look, whereas continuing claims, a proxy for the number of people receiving benefits, rose to 1.87 million in the previous week, the highest since early January. So if that's what shows that there's less jobs to go out and get, is that you have higher continuing claims. Also, the kind of jobs, what doesn't take into effect this data, if you dig deeper, it does, but not even still deep enough. You're not going to have somebody that lost a white collar job coding. If they were doing software coding, they're not going to go take a job as a roofer unless they did roofing when they were a kid, a teenager or in their 20s or something. And and they're just going out to make money. That's not the way it works anymore. It really isn't. So you're not having people that are changing careers, basically. If they're white collar, they're trying to stay white collar. And most people today are trying to be white collar. We don't have enough blue collar workers out there. Just not enough people that are willing to get their hands dirty and get their, use their hands in their back to make a living. So I said what I said, and I stand by what I said. It's why you see so many Latino workers in the house building industry and the trades and everything else, because the white people don't want to do it. The Americans don't want to do it. So anyway, as we get into the other stuff, let's see what else we got going on. There's really not much else. Again, today is Thursday. Tomorrow we got Friday. Get the PCE inflation data tomorrow. It's not going to make a ring-a-ding of a difference. Nobody really cares about it. The Fed's inflation data. I did want to show you there was an interesting take yesterday from the Fed minutes. We did get those Fed minutes, and it's, as it says here, we'll go through them together. Fed minutes show several officials nod to rate hike scenario. Not a rate cut, a rate hike scenario. Federal officials signaled renewed worries over inflation, with several policymakers suggesting the central bank may need to raise interest rates if inflation stays above their goal. Now, remember, this was before the last CPI inflation reading, which showed inflation coming in at or just barely slightly below expectations, but inflation showing some of the lowest readings in 5 years. So that is the CPI inflation. PCE tomorrow is the Fed's favored gauge of inflation, likely to show something very similar to what we saw with the CPI data last week. Not likely to see any big number, but they are worried about inflation. And if you kind of read between the lines and read the meeting minutes, it looks like a lot of the Fed members are more worried about inflation than they are about the labor market. And when we get jobless claim data like this, that supports that thing. Initial claims decreased by 23,000 to 206,000 in the week ending February 14th, the lower than all but one estimate in a Bloomberg survey. I mean, it's coming in lower than expected. People are, thinking it's worse than it is if you believe any of the data. And we could argue about the validity of the data, but the data is what we have to work with. So Trump has repeatedly said he wants the next Fed chief to deliver lower interest rates. However, with the minutes fell far short of suggesting most officials were contemplating the possibility of a rate increase. It made clear the Fed is shifting further away from agreeing on another cut. I think that Warsh, if he does get confirmed and get in, is going to have his work cut out for him. It's not an overwhelming consensus. The Fed chair is the one that gets all the face time, but Powell is not the only one that doesn't think that the Fed needs to be cutting rates and that they are at a neutral rate. Seems like that is very much what is happening behind closed doors. So Warsh is definitely going to have his work cut out for him if he is going to try and rally other members to make cuts. And that's why, Pulte was trying to go after Cook and put other people in other seats that could help toe the line, because it is more than just a single vote. So keep that on there. Ron Siegel says the gig economy affects jobless claims. If one starts working in the gig economy, they don't qualify for unemployment. AI will affect jobless claims. One can code on AI and become self-employed. Yeah, I mean, there's a lot of vibe. That's called vibe coding. PCE data is 2 months old. They're releasing the December data. Thanks for pointing that out. Yes, tomorrow's PCE data is December's data. The Bureau of, I thought I talked about this yesterday, Bureau of Economic Analysis still running quite a bit behind, and that is the old data. And in fact, I think we get new PCE data in a couple of weeks. I'll have to look and see on the economic calendar when we get some, but it's actually, I think, going to be out a little bit sooner. So yeah, this is December data. So one more reason that it won't have much of an effect on markets. Ron Siegel says the consensus will change. The Fed chair determines what 100% of the employees are doing. Once Warsh is there, he can alter the direction of data they're reviewing. I don't know. We'll see. We'll see. As you have pointed out, there is definitely a political and ideological slant and stance that seems to be behind the scenes in the Fed, that they do seem to be Democrats and leftists. And that I think that, they're not going to want to bend the knee. So we will see. I think it's going to be an interesting take. But right now, if you take a look at Fed futures, markets very much not expecting any kind of action at the next Fed meeting in the middle of March. We're still a month away from that meeting. Nothing's changing there. Expectation for April has been around 70 to 75%. Come on. April. All right, let me refresh the page because it's just, come on. In June is when we've seen the highest likelihood, and these are not refreshed. Maybe I'm having a crappy internet day. Mike said if your number of workers is smaller, you can't lay off. Well, that's true, but that's not because less jobs. The unemployment, that's more jobless, like the JOLTS survey, where you've got job openings and labor turnover. So, all right, well, this is not refreshing properly. I don't know if it's them or me. So anyway, we will go ahead and stick to the good stuff here. I'm going to wrap it up for the day. Really not much else to talk about. It's, again, very much, I would be locking, not that there's an urgency, but there's really not a likelihood that rates can improve to end this week. As of right now, we're kind of just floating. And here, I'll throw it on the screen one more time, and then we'll finish up with that. But Let me see, entire screen. Here you go. Share. Come on, share. Looking at this together, you can see that we have a downward trend. We capped out right here, and now we're kind of moving down. And we could continue to move down. You're not going to get any support until you get down around these levels here, which were, hold on, come on, like 100.03, 100.05. You've got the 25-day moving average at 100.04. Normally, I don't put a lot of stock in the 25-day moving average to give us any real support, but it kind of collaborates the other numbers. So we've got some room where you could lose about 20 basis points before we get any real technical support. So with that in mind, it's not a lot of movement, but it's certainly not what we want to see. So I would be locking anything closing near term. Anything's got time. I don't think you have to worry about it. We ebb and we flow, but nothing that you have to worry about with that. So best thing about stats is you can always find a stat that'll support your opinion. Yeah, absolutely agree with you on that, my friend. Mike said I was freezing. So yeah. PC data is 2 months old. Yeah. Okay. All right. Well, I'm going to wrap it up. Thanks again, my friends. I will see you guys tomorrow. Hope you have a fantastic Thursday. Get out there and go get some business. I'll catch you tomorrow. Take care, everybody. Bye-bye.